Come on. I hate when the clock doesn't start. Okay. This is John Paul Mendocha, Dr. Street Selling. This is the Raging Verbalist number 125. If you've never been on the Raging Verbalist, you're in for an expanding treat today because of our topic. So here's the thing. I don't really cover politics. I kind of stay away from that. I'm trying not to get banned, but trying to also say some things that I think are useful, meaningful, and all the rest of that. You can also go to Position to Win book Facebook group and you could ask questions or put things down there. Also, you can go to positiontowinbook.com and check out stuff, bunch of free stuff for you cheapskates out there, but also some other good stuff. And with me, as always, to lighten the occasion, to make this a better, brighter place, and to stand in for you is the ever lovely Sandra. Sandra, good day to you.
Hello, how are you doing?
Well, considering that it took an hour and 10 minutes for them to get the luggage and they had to get a manager and, don't even get started with the rental car. I'm doing great. Yes.
Yeah. So raging is very appropriate today.
Raging is very appropriate. Well, I mean, it's nothing like standing there at the carousel waiting for the luggage. I know that isn't what our topic is, but it's got to get off my chest. Is waiting for the luggage. And you're standing there and the little red light comes on, beep, beep. And like Pavlovian dogs, we're like panting. We're happy, excited. Hey, here comes our luggage. And the luggage comes out. And of course, the first bag pops, the next bag pops, the next bag pops. And if you don't see your bag, you don't do anything. And this guy, and this guy is, probably in his 50s. He's got that severe military look to him. And I'm not against military, but this is a guy who he doesn't have to spend a lot with a stylist or worry about shampoo because there's no reason to condition it. And he walks up and he grabs the tag and he goes, $9.90. And I'm like, is that like the cost? He goes, no, it's the damn wrong flight. It's not the right flight. And he walks off. And I realize now what he was talking about. And the woman next to me goes, oh, crap. That's the other flight. And all these people who have not even gotten there to the carousel, their luggage is spinning around and around. Anyway, so that's how I'm doing today. Thanks for asking. Yes. Okay, but what's our topic for today?
Oh, an even happier topic: inflation.
Inflation. Yay.
Oh boy.
All right. We can start singing the song, what goes up, 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 up and away. Yeah. Okay.
All right. So to kick it off, in your many years in business, have you ever seen inflation this bad?
Yes, I have. My father started a business in the late 70s and the early 80s, and inflation was bullshit, suck kind of thing. I mean, it was terrible. And it was, 10, 11%. In fact, it peaked in 1980 at, I got to read it right, make sure it's 13.55%. By the way, I should point out to everybody that, that the 13.55%, I mean, to buy anything for business was crazy expensive. I mean, it was nuts because everything had gone up. Now, if you had a contract with a customer, because he did, owned a machine shop, did contract manufacturing. If you already bid it, then you were kind of stuck. So I got really adept at negotiating around these things. But yes, I've seen it worse. But again, maybe it's just like that. Since I guess I feel like in a musical theme, only the beginning. Maybe this is just the start of this whole thing, and maybe it's going to get worse. But yeah, that was pretty bad. The 70s and early 80s were really a bad time for inflation. And in some ways, we have been like lulled to sleep for the last 20 plus years with very low inflation and kind of been skating away on it. Doesn't mean that there wasn't inflation around the globe, but we have missed it. And one last little tidbit before we roll on. A source told me just before I got started here that they've actually changed, haven't been able to verify this, but they've changed how they measure inflation. And if we use the same measuring methodology as we did in the early or the late 70s, early 80s, we would find that inflation is actually higher than it is now talked about. So yes, yeah, I've lived through that. Don't want to live through it again, but here we are.
All right. So is it worse this time than the last time?
So here's the interesting thing is that it's different, and every time that when you go through a cycle, it's different. But it's different because unlike the past, where it was took time and markets adjusted slowly and prices did this or did that, we're living at the internet age, and because of that, it's like things are happening much faster. Um, you know, Before I got on my plane earlier this week, I had to put the old petrol, the gas in the minivan, and paid $5.60 a gallon. By the way, Costco was out of gas, or I would have bought it there, but they were out of gas. So imagine what kind of crazy is going to go on. So yeah, it just means the prices adjust much more rapidly than they did before, and that is probably the difference, the biggest difference. And we don't know where it's going to end, because and here's my favorite is when people talk about there's all this price gouging and all this other stuff. You haven't even seen price gouging yet. I mean, just think about when Venezuela, which is now down, by the way, to 1,400% a year inflation. How do you live with that? Just a couple of years ago was at 9,500% inflation. I mean, they can't even sell laundry detergent by the box. They literally sell it by the load, because you buy it because by the end of the day it may be more money. So yes, it's the difference is that the speed at which prices change, velocity is quite different.
So why did the administration say that it was just a blip and it was transitory?
Sadly, most of the population is oblivious. Like, things are going along pretty well. They just assume they're going to continue going along pretty well. Last year at Freedom Fest, I had a really interesting guy that I did an interview with, and we should probably post a link to him, to Adrian. And we were talking about, is inflation transitory or not? I think this is all about the double speak that the politicians have gotten into, which is, if you tell people who are oblivious that it's just going to be a short time, they go, oh, well, it can't be that bad. But when you travel and you start seeing that, like, diesel is, in a place like South Carolina, it's $5.15 a gallon, that this transitory nonsense is just nonsense. It's not real stuff. It's just something that they make up. So why did they say it? I think they said it because politically it's a way to be expeditious about it, kind of chill people out, get them thinking, oh, it's going to be over soon, and away we go. And so far it's not transitory. It's marching ever higher, and it's continued to do that. In fact, just before we were recording this, I mean, oil is back over almost $105 a barrel for West Texas Intermediary, for those fact checkers out there. And I can tell you that this is after the big announcement that we're going to be bleeding the strategic petroleum reserve for 1 million barrels a day. And guess what? We're still at almost $105 a barrel. Yikes.
So how is this different?
I would say that the biggest difference is just the fact that we are now living in an internet world. It used to be that the internet was, or the technology was external to us, but now we live it every day. The fact that the airlines used to change prices every once in a while, well, they change prices at will. In fact, they change prices whenever they feel they need to do it. Now, people will say, well, but what will happen? Well, what will they do when no one is flying? Well, they're already canceling a number of routes, a number of flights going forward. And part of it is they can't get staff because it's too expensive to have them. I think the glitch, which they didn't want to say last night for my luggage, was inflation driven or staffing driven, because they don't have enough people working that late at night. And you got 7 flights that I counted that came in. And that means you got just fewer people working on it. That's just why they had to send a manager down to do it. The difference is I think the world is reacting, or at least in the US, it's reacting much faster than it ever did. And because of that, since we live in an Amazon world, we are just going to have to deal with that reality. And things aren't going to take months or years, or it's going to take hours and sometimes seconds. And you're going to see probably somebody's going to get really smart and build a pricing model and piece of technology that will track and change prices at will in seconds. That's what I see. Now, before you get to that, let me just give you an insight, which is something that hasn't changed. We have not changed our pricing, which is if you go out and you want to get ahead of all this, you want to get smarter than this, because those who are smart are going to figure out how to do it. And the best way to do it is to go out and pick up this, which is most businesses fail in the first 5 minutes. It just takes them 3 to 5 years to realize it, position to win. I don't have a real green screen behind me, so I'm getting crazy stuff. So you can go to positiontowinbook.com, positiontowinbook.com. You can also go to Barnes and Noble, Amazon. If you want to buy it, it's an ebook. It's also available on Apple, and go check that out. But what you can do is you can go find out how to position yourself better. And there are going to be people who are going to use this circumstance and situation to their advantage, and they're going to make more money because of it. So hopefully what you'll do is you go check that out, go pick up the book. And if you pick up the physical book from us at positiontowinbook.com, I'll sign it. I'll put down something like, hey, may all your prices not go up or something. I don't know, something clever like that. So what's next, Sandra?
All right. So will it come down as fast as it's gone up?
Well, it's interesting in in the stock market, stocks usually come down faster than they go up, and that's just a reality. But the pricing is the opposite. Usually, it is much slower for pricing to come down, primarily because of what we talked about, the speed issue. So if prices came down dramatically, let's say in oil, it's going to take time for it to work its way through the system. Why? Because producers, distributors are sitting there saying, well, how much did I pay for the oil that I've got versus what I have to pay for the oil that I'm going to go get? And I'm going to be a little more conservative. So pricing usually doesn't, adjust down as quickly. Little note for all of you. I mean, we'll dip our toe a bit in politics. Donald Trump wanted to replenish the entire strategic petroleum reserve at $24 a barrel. And if any of you want to do the math, what's the distance between 24 and $104 and change? How about a lot? A little over $80 a barrel times how many? Times a million barrels a day. Yikes! Didn't do it. Had a historically low point in oil. Did not take advantage of that. That got blocked. So keep that in mind next time you're in November and you're voting, because everything has energy in it. Period. In fact, maybe we had to do a Raging Verbalist just about what doesn't have energy in it. Well, I've seen some YouTube videos like that, but anyway, it's a different story. All right, what's next?
All right. So what does this mean to various investments? So like, for example, the stock market.
Well, eventually the stock market ends up thinking about how inflation is going to deteriorate earnings. It's going to hurt businesses. People are going to buy less. They're not going to be able to afford as much. I mean, when you see that the price of ground beef hits $8, true number, $8 a pound, or gas hits $10 a gallon somewhere, it changes patterns. It changes what people do. It changes disposable income. So it's probably going to have an adverse effect on certain stocks. In fact, people have been talking about the stock market going to find a way to go in, crash and burn. This might be it, but I think it means that anytime there's a disappointment, there's going to be punishment meted out. We just saw that this last week, and you may say, how does this tie to inflation? It just shows that the environment changes and people get punished for not making their numbers. Netflix didn't make their numbers and they lost like 35%. And I went through, because again, this was more for my personal investing, but I looked at all of the analysts that dropped their target of where they thought Netflix is going to be at, and it was pretty scary. So that, I think it's going to not only could, I think it will hurt the stock market, because it's going to mean there's going to be less discretionary money.
Okay, so how about real estate?
Interesting, real estate, because see, in the 1970s, real estate was on a tear. Everything else was struggling along, but real estate was just like rocking out, because real estate is an inflationary hedge. You're borrowing money to buy it, you're paying it back, ostensibly with cheaper money. But we just hit the highest peak in residential real estate in March. And I was just talking to, my friend yesterday, who's been in the mortgage business for a long time, since the 80s. And he said, interest rates have popped up to 5 3/8. Now don't use that as a measurement. Just don't, your mileage may vary, but the number of people that he's talked to who have freaked out, I don't know if that's a technical expression or not, but they basically are quite concerned that interest rates are up dramatically. And that's because people have gotten lulled to sleep for a long time with zero interest rates, which are not sustainable, as we're now discovering. If you're thinking about buying real estate, all I can tell you is that you may want to think about not wasting a lot of time waiting, because interest rates are going to go up. Now, that's my guess. That's my swag. So, for those who don't know what a swag is, it's it's like a wag, but it's like a silly wag, silly wild ass guess. So it's a swag.
All right. How about crypto?
Take that one to the bank, huh?
All right. So how about crypto?
The crazy part about crypto is that crypto seems to have kind of taken on this interesting life of its own. And I think that crypto is you're gonna see people buy crypto, just like people buy gold. I don't know if it's going to match up the way people think, but like gold is like hovering right now at $2,000 an ounce. So I think that crypto is going to see some resilience. Crypto's on its own curve, though, for those of you who don't know, because there's this thing called the adoption curve. By the way, if you've read the book, you would have known a little bit about the adoption curve. Shameless plug. But if you look at the adoption curve, is that more and more people are adopting it. And here is my harbinger, what a fancy word that is, of where crypto is really going. I was in Philadelphia, pulled the rental car in to buy some gas because I don't want to pay, $10 a gallon to the rental car company. And, whip in there, and this place in Philadelphia had so much cigarettes. I have not seen that many cigarettes in a convenience store in a long time. By the way, cigarettes are a currency around the world. But in that place, that is really kind of a, I would say, not an upper crust convenience store. They had a cryptocurrency ATM. And I said to the guy, "What in the hell is this doing here?" He goes, "Yeah, that makes us a bunch of money." And I said, "Well, how does it work?" And he goes, "Well, people come here with cash and they put it into this machine and they get their little, wallet in the sky, and they're buying crypto. So they're buying crypto in a, euphemistically, you could say working class neighborhood in Philadelphia. People are buying crypto on an ATM. So I think crypto has some legs.
All right. And lastly, what about oil?
Oil is one of those, and again, this is where we could actually do a whole Raging Verbalist about. Oil is like the most misunderstood commodity, because you have people who hate it, you have people who kind of like it, you have people who do this, you have people who do that. all I can tell you is that oil before there was crypto, there was oil, and oil is traded 24 hours a day, 7 days a week, all over the globe. If you want to go look around, you can go find websites where they are just pricing oil 92 ways to Sunday. I think oil, as long as demand stays up, oil is going to stay up. We have an imbalance in how much oil is being produced. And here's what we have now, which is there are lots of OPEC and other non-OPEC and then other people who aren't pumping as much as they could, even though prices are up, because they know every time they pump too much, they overpump, and then prices go down and they lose money. So I think we're in for a long haul. Personally, I think we're in for a long haul. Where oil is going to be above 100. Will it ever hit 200? Eventually, it will. I mean, there's a whole political headwind against fossil fuels, which I think is kind of misplaced. But the reality of it is that oil is up and it's going to stay up. And like I said, 1,000,000 barrels a day getting released from the Strategic Petroleum Reserve, and we're at $104.60.
All right. So what do you think needs to happen to stop this from moving on?
Well, the way you stop inflation is kind of like it's a little bit like being told that, hey, you gotta knock off the booze and the smoking, and then you gotta cut all that stuff out because it's gonna be, you're gonna have trouble. You got trouble now, it's gonna get worse. And what you have to do is you have to actually have the Federal Reserve get a backbone and start raising interest rates. And the reason why this works is that because the Fed is way behind. If you don't know this, Fed is way behind on raising interest rates. For political reasons, they kept them ridiculously low. And if you start raising interest rates, what it does is it cools the economy. Every Federal Reserve chairman, with the exception of Paul Volcker, St. Paul Volcker, basically almost put my father out of business, but he said, look, we're gonna whip inflation now. For those of you who don't remember, you could probably go look at find this online, probably at eBay. Is that the Ford administration printed little buttons that said whip inflation now, as if we could chant our way out of it. Didn't happen. So what has to happen is that the Fed has to get more aggressive in raising interest rates, which will slow the economy. And if it slows the economy, prices slow, because they're always a reflection of an imbalance of too much money chasing too few goods. And that's where we've been at. I mean, we've had a lot of money sloshing around, but we've had a lot of goods. We've had things that people could buy. I mean, just look at how many phones will be sold in the next year, tons, right? So people feel comfortable enough to do that. So you would have to see an aggressive Fed raising interest rates, which of course would cool the economy and could tank things like real estate.
All right. So how does one prosper in this inflationary environment?
Well, it used to be harder because you had to have like a lot of money to be able to do it. Now we've done a video already for this thing called an I bond. The U.S. government, for whatever infinite wisdom they had, came up with this thing called an I bond. And I is for the word inflation. The word today is inflation. I mean, I wish they would actually do this on Sesame Street, but the word today is inflation. So an I bond is a U.S. security, and for as little as $25 or $50, you can actually buy this. And right now, it's at a little over 7%. It's going to go up to 9.62%, but you'll have to wait until it's officially there on May the 1st. And that's one way you can do that. You can't put a ton of money in it. I mean, if you got a ton of money, you got big gym bags of money, it's not designed for that. But that is one way to do it. The other way to do it is you just have to think in terms of, what are you going to do in your life? I mean, are you going to go out and borrow money right now? Maybe now's a great time to borrow money, because with the Fed tightening, with all this happening, we're going to see rates go up, and when rates go up, it's going to cost you more to do whatever you want to do. So I think the other thing is to look at anything that provides income is probably a good thing to hold on to. And if you're going to be conservative, you want to go out and find things that produce income and understand, yes, inflation is going to, ravage the dollar and all that stuff. But what you got to know is, anything that throws off income is a good idea, in my opinion. So I think that the cheapest way to do it, or the least expensive way to do it, is through an I bond.
All right. So what are the actions one can take to protect against these problems?
Well, one of the things you can do in business is you have to understand that as your costs go up, you cannot be slow in the process of passing those costs on. You have to be aggressive. You have to make sure that people know that, and you have to hold firm ground. I mean, I'm doing this with one of the companies I'm in right now, is that you have to make sure that you get paid what it's going to cost you to go and do business in the future. And we have been living in and been trained by the Amazon machine that prices are going to go down, 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 down. And I don't think that's going to be the case. So what you need to do to protect yourself is that if you're in business, is that you're going to have to make sure that people know that it's going to cost more money to do whatever you're going to do. Now, you may say, well, John, I can't do it. I'm in a competitive environment. You have to decide how much pain you're willing to suffer on this. I constantly am reminded of people who mistakenly think that they can race to the bottom, and what they end up doing is they go broke. And I can tell you, every turnaround I've ever done, I've raised prices, every single one, 100% of them. And why? Because if you don't raise prices, you don't have the margin to go out and make the money that you need to make the business grow. What I hope you figure out by this whole session that we've talked about is that inflation is here. We jokingly said, a couple of days ago when we were thinking about what we were going to say is, I could come on and just say inflation is bad, inflation is bad, inflation is bad. Thank you very much. See you next week. We went a little bit deeper, but inflation is bad. And inflation is one of those things that when you get lulled to sleep, when you believe that it is not going to come and get you, is that it is getting us every single day. Everything that you're doing is going to be affected by inflation. And you have to understand that that means that your lifestyle, whatever that may be hampered, curtailed, and limited. What I hope you do is you think through this, and instead of complaining and bitching and moaning, what you do is you make good choices, make better choices, and understand that there are ways to make money in this environment. Go out and do that. But more importantly, is do not sit around and say silly things like, well, this is a blip, it's transitory, we're going to go back to the good old days. Now, I don't know where we're going to get back to. What we're going to do is we're going to see a change, and those who see those changes early will in fact make the best of the circumstances we have. And with that, I'm John Paul Mendoza, Dr. Speed Selling, and myself, and for the ever lovely Sandra, it's been the Raging Verbalist 125. Inflation is here. Don't deny it, and go out and do something about it for yourself, for your family, for your business, for your life.